Good morning. Good
Good morning.
morning.
Good morning.
How are you today? Well, good morning to our viewers. It's another beautiful sunny morning in Miami. Um, Welcome to Coffee Time. For those of you returning to see the show, welcome back. We love your support. If you are new to the show, give us a thumbs up or a hands up down in the comments. We welcome you as well. I definitely want to encourage everyone to go ahead and subscribe or like the channel that you are using to watch us on today. That would, we go online every Thursday at 10 a.m. Eastern on Facebook, LinkedIn, and YouTube. So please go ahead, click that like and subscribe button on the channel you are on. Just a quick intro today. My name is Marie Torossian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor, and a CFO. I've created a very unique methodology and I've registered valuation MT, which I use to help business owners that reach their first million to get to their next 10 million and more. I want to invite you to kind of learn a little bit about this process, which I'm talking about it at Clubhouse and the Landing Big Whales group every Wednesday at 10 a.m. Eastern. So we've already covered through 5, 6 weeks now. So go ahead and follow. I'm going to put my link tree and you will be able to see many of the different links and you'll be able to follow me on Clubhouse and be able to see when I go on next Wednesday. And then, of course, I've done a couple of I've written a couple of books. One of them being the Complete Guide to Business Growth, which is available for purchase on Kindle. This is a really complete way of teaching a business owner how to grow their business using financial information. And the other one is a quick ebook, A Business Owner's Guide to Operational Accounting. And I'm also going to put the link in the chat for you. You can download it. It's completely free to you. I'll give you very high level guidance on what to do and how to look at your financials. Just a quick note as well. Tomorrow is our boot camp. If you haven't signed up, just go ahead and do that. I will put that link as well in the chat. The boot camp is meant to help new startups and new business owners or those who are thinking to be entrepreneurs on what to expect on, from a mindset standpoint, accounting and tax, and all the financial information that goes into setting up your business and how to view them. And also, we'll have a guest speaker to talk about marketing and sales. And with that, I want to introduce to you and welcome my featured guest every session, my friend and my tax colleague, Pedro Gonzalez, CPA.
Good
Welcome,
morning. Good
Pedro.
morning, Marie. Good morning, everybody. Again, awesome weather over here. We're enjoying it and good times. Pedro Gonzalez, CPA, your business and tax strategist, uh, helping you achieve your financial goals. Uh, we use basically three main areas of our financial lives, which is improving your cash flow, lowering your taxes, and developing exit strategies in your business to help you again have successful financial goals and help you achieve those financial goals in your life. We have issued the ebook on real estate investor tax strategies. We have has been well received. Has great material there for those of you that are either already in real estate investing or thinking about it. The good thing is that we go beyond what you hear or read. Most CPAs will not tell you about those things. Some of them are a little out of the box. Like I tell people, I have no box. So sometimes you gotta go beyond of what and really dig into what the text is saying and the intent behind the word. So there's things that you'll see there that probably most likely your CPA has not told you that you can do. It's all legal. In addition to that, there's a 7-day e-course that also will enhance the information you will kind of receive on the ebook. And then we have added a newsletter that will follow after your 7-day e-course that will again continue adding financial information for those of you in the interested into the entering the real estate arena. Uh, we're continue working on our book for S corporations. Again, the goal is to have a book that is going to be, geared towards addressing those specific issues that we as entrepreneurs encounter, questions that most compiled questions over the many years, and we're going to put it into a book. Is not to be the same technical issues that you hear about, how to form an LLC, or I'm sorry, an S corp versus LLC. That we have already hashed out that so many times. Is practical in English, something that's easy to digest.
Yeah, that's always important. We don't want to sound extremely technical. We want to
Yeah.
simplify things, and that's the reason why when we're doing these shows, we try to speak in normal English, not so
Correct.
technical. We don't give you very crazy codes or anything. It's more like very high level and in simplified English that any entrepreneur listening to it will be able to understand and be able to implement. With that, I want to give everybody a quick reference to some of the episodes we've covered in the past few months. We've talked about, different taxes, tax due dates, self-employment related accounting and tax situations. We've talked about tax planning, 1099s. We've talked about partnership agreements, buy-sell agreements. Actually, last 2 weeks, we talked specifically on entrepreneurship and a success mindset.
Mhm.
And that's exactly where Pedro mentioned that being out of the box, or more like no box. And that's that's really a talent, right? So we usually, most of us are kind of in a little bit of a box, and then we
Mhm.
start opening the box, and then we take off the box completely. And otherwise there's no way to grow, right?
Right.
So today's topic is very, very dear to me. It's one of my favorites. It's financial analysis. And the way we want to approach it is, Pedro, and to all our viewers, is kind of talk about what is it, why do we do it, how do we do it, and when should we do it. So with that, I'm just going to open it up. Pedro, I'll let you take the stage first, and then I'll jump in when necessary, because this is one of my favorite topics. This is what I love to do. Switching from being an auditor to a controller, and then working my way to CFO. This is one of the areas that I loved so much, because it really fit in with the operations of the business. And that's what I think most business owners that look at us as CPAs, they don't really see that, because they think we are only focusing on tax side of
Mhm.
things.
Yeah.
And then, but then again, there's many of us that actually really focus on the financial analysis, because that's going to help us make decisions whether we can survive an uncertainty, we can overcome an uncertainty. And so with that, I'll open it up for you to say an overall idea of like what, your point of view of why financial analysis is super important for a business.
Yeah. Financial analysis, Marie. You and I, share common. I think you and I agree that the financial analysis it has to be part of all entrepreneurs. I mean,
Yes.
understanding the numbers. Uh, you don't have to be a CPA or financial analyst to. That's not what we're asking. Is to have an understanding about your
Absolutely.
numbers and what drives your business. We call in drivers. That's other names, KPIs. I mean, there's different names that they go by, but basically, I simplify by saying the driver. What drives your business up and down? You know what I mean? So, but financial analysis is going to be the this financial data that is it helps us. Numbers don't lie. You know what I mean? So
Yes,
basically, if you can
absolutely.
extract and utilize this number, this is why I emphasize that your CPAs has to be more than just simply doing your bookkeeping and your tax prep. A transactional CPA. It's somebody that can help you dive into those numbers and help you then extract from that how I can perform better. Better
Right.
performance, and this happens in sports. I mean, you look at analysis of batting averages, or if
Hmm.
if you're
Right.
in
Right.
basketball, they look at all of that is a different type of analysis, but you understand why the numbers are so important. Why
Yes.
is it that they are digging into how do I perform against left-handed pitchers versus right-handed pitchers,
Right.
or why when I shoot from this side of the court I do better. All of that is analyzing all that data. So why? Because this is how it's going to help me improve.
Absolutely.
In this case, the athlete. But in this case, you can do exactly the same thing. Somebody like Marie or myself, what we do is that we extract this data and we can tell you is, listen, you may not realize this, but the month of February tends to be your best month.
Right.
And then we start digging in and why that month tends to be historically your best month of the year,
Right.
or the first quarter tends, those kind of analysis, or a certain product or a
Hmm.
certain division of your business performs better than the rest, and why. You know what I mean? So that, in
Yeah.
essence, in a nutshell, I guess in the big nutshell, the financial
Right.
analysis.
Big
But
nutshell.
that's basically what entails. It's going beyond the numbers that are being presented to you, because otherwise what you're getting is what we call historical data. Not to say that it's not worth, is not important, but
Right.
we realize that when you're getting right now your December 31st financial statements, and now your accountant is finalized, or even the January financials that were just delivered to you, that's historical. That's what already happened.
Right.
Financial analysis, what is, how can we utilize that data and tell you in which direction we can create
Yes.
trends. We can tell you then, listen, based on what information, taking new information from now that we're getting from inflation, the taxes, the economy, certain factors, and tell you, listen, this is what we can see happening moving forward.
Right. And then expanding on the example that you gave, let's say, historically February is your best month. For example, you look at 3 years, February is the best month all the time. And then suddenly we look at this year and this February just completely blasted. Boom. And we're like, whoa, what just happened? So the most important thing is to look at the data and see what is it telling you. It's like the data is talking to you. You just have to look at it. So, and again, like you mentioned, as a business owner, we're not saying, hey, you have to know everything, but you should be working with accountants or CPAs that are able to help do this type of analysis and sit down and explain to you what's happening in your business and how you can use that financial data to make sure you're making the right decisions.
Yeah.
So if something like that happened, you're going to stop. You're like, you're wondering, okay, let's go back. Let's dig in. What happened? Why did the revenue drop? Did we not spend enough money on advertising? Did we hire someone new? Like, what are all the different possibilities of something happen? Or like in this situation happening in the other side of the world, there's a war happening and there's gas prices going up, like we were talking earlier. And how is that affecting my business because I do deliveries, for example, and
Correct, exactly.
my cost just went up because gas prices have gone up. So all of these discussions have to happen quite often. So with that, I want to bring up again, and I'll give you a chance to speak first. So you know our audience, our business owners may wonder and ask, so how often should I do this type
Hmm.
of analysis? How
Yeah,
often?
yeah. How often? I will say
How
that,
often?
you know, uh, there's certain analysis that should be done, obviously more frequently. Some of them, at least, you can go, semi-annual, annual, quarterlies, monthly. So, I will say that it depends on the size of the business, the complexity of your business. But there's the frequency is going to be depending on the size of the business. I'm kind of tell you that it has to be done monthly. Some businesses will be required monthly because
Absolutely.
of the size and complexity. They're having, for example, if you have debt, you're going to have certain exposure to certain ratios that has to be met. And depending on the line of credits that you're requesting, amount of mortgage and loans that you have, you might have to submit monthly financials. And in that
True.
case, guess what? Your analysis has to be done monthly, because if you're not meeting that analysis of those ratios on that month,
Hmm.
you better prepare a response to your bank, because they're going to be digging into those numbers. So, that's why it's so important that you have a good CPA that understands how to analyze and help you prepare a response to your bank, and can communicate properly with the bank in a PC, in case, especially in case if you are not meeting those ratios.
Yes, yes, agreed. I guess when a good thing to say for those who are just starting out to at least be able to look at it on a quarterly basis to see how they're performing quarter to quarter, and then start with annual. And as you're growing, probably second or third year, you might want to start looking at monthly trends of what's happening in your business. Especially with during these days with a lot of uncertainty, the more frequently you look at it, even if it's super high level, you're better off than not looking at it at all, or just waiting for too long. Currently, we are going through a very, very big
Yeah,
uncertainty. It's been continuing
yeah,
for now, what, 2 years, and to keep a business running, you might have to go back and take a look, even if it's high level on a month to month
yeah.
basis. I like looking at my numbers as often as I can.
Yeah, yeah. I mean, we love numbers. I mean, numbers are our friends, and but it's also the friends of those successful businesses because they know that in those numbers is the key for
Yeah.
them to take control of their industries.
Yes, yes, absolutely. Absolutely. And let's see, are there any specific types of analysis that you like that you might want to mention?
Well, depending on again on the industry, one that I think is common in most industries is your gross profit ratio.
Yes,
I think that is a key one that to look at, uh, irrespective of your industry. I think you need to have a good handle of your gross profit ratio, because based on that also it's going to affect your pricing. I mean, how can you
true.
determine pricing if you have no idea what your gross profit ratio is?
Yes,
And so, why again this is why the importance of all of this analysis, because especially like you're saying right
right,
now with everything that we're seeing, the costs are going up, and then now your gross profit ratio, if you do no adjustment, you're gonna see your gross profit ratio start shrinking. You know what I
right,
mean? Because and obviously that's gonna drive into the bottom line, so your net income might be
of course.
reducing or potentially getting into a net loss, because the gross profit is how you pay your other expenses, the operating expenses of your office, and essence your back office. So you
Right,
have to have right now is a healthy gross profit, and so you might have to adjust the price
yes,
of your product. How much are you
yes,
going to increase your price? I don't know. Well, you have to look at your gross profit. Yeah, I mean, you got to look historically what it has been, your gross profit. So, gross profit ratio is one. If you're labor intensive, I like to look at the labor ratio as a
right,
percentage
right.
of your
The percentage of revenue.
yeah, as a
Yeah,
percentage of revenue, just to see, it doesn't make sense, especially if you have a lot of, let's say, for example, contractors, especially, because there
true.
has to be a correlation between your contractors and your revenue, because the contractors you're hiring them is to, for example, you take an office of therapist as an example.
Sure.
So you're hiring therapists as a contractor, and the idea is that, well, each one is in essence is a revenue center for you. So you have
Yes,
10 therapists. So you're analyzing each one as in essence, a profit center. So you have Marie, you have Pedro, you have Carlos, and you have Charlie. You know what I mean? That's four therapists, and you should be able to analyze the performance, how much I pay each one of them, how much
right.
revenue each one of them generate, and that should, in essence, give you a gross profit per therapist.
For therapists, exactly.
Exactly, and then that's how you determine that Marie performs better than Pedro and Carlo and Charlie. You know what I mean? Because she generates better revenues. What we pay Marie is a better rate, and we can potentially even give her an incentivize by providing her a bonus because of her performance, and on and on and on. So what I like to look in those cases is the contract labor as a percentage of revenues, because then that tells you it has to maintain a healthy balance between those and that number.
Yes. And I love that you brought that example because that's one of my favorites too. Because I do it in our firm as well. And I'm sure you do it too for yourself. And I've seen people that leave salaries or contractors as an operating expense versus actually coding it as a cost of,
Of
sale.
revenues, yeah.
And then they don't really analyze the return on investment on,
Correct.
because at the end of the day, hiring a contractor is an investment to your
It's
business,
exactly.
investing in that contractor to generate revenues for you. So for example, in the example of the therapists, right? You're comparing five therapists, and you see that one person is working 10 hours because this person is really attracting clients to them, and they're the
Mhm.
ones working the hours and generating revenue. The other ones are not. There's something off. Now, from there, as a business owner, you can also, analyze and say, okay, what is this specific contractor doing? Now we're becoming a non-financial data. What is this person doing that
Mhm.
is different and it's attracting more clients versus the other four? And what can we
Right,
teach
right.
them? Right now, it's becoming a very different kind of decision you can extract just from doing that type of an analysis. So it's not just like a financial, maybe you might start with that, but the type of decisions you can make from that one analysis,
Yeah.
that ratio analysis, can impact your business in such a big way. So imagine then you turn the other three or four to
Mhm.
someone like the first one, and
Correct,
now
correct.
you are booming. So you just have to figure out how to use those analytics to make the right decision. So I
Correct.
love that example.
But how can you make those decisions without the numbers? This is the part
I
that
know.
surprises. Yeah, I mean, because and we experienced that when the COVID, for example,
Yeah.
where a lot of businesses were forced to shrink their business operations. Out of the scenario that I just gave you, imagine a therapist's office. Which of the four are you going to lay off, or lay off? Which one of the four you're going to lay off if you don't know which one performs better? You know what I
Exactly.
mean? A ratio that also I like to use in cases of those like therapists and things like that is, or offices that have more like a medical type of industry,
Sure.
is patient a ratio of a number of patients per contractor.
Per
But
contract, yes.
you know what I mean? Not only the revenue that they generate, but how many patients. And sometimes what happens and why one performs better, maybe you're paying more to one contractor, but when you look at the analysis of revenue, it's better. And the reason is more experience. It sees or attends more patients per hour than
Exactly.
the other therapist, meaning that the other
Yes.
therapist is taking longer. The transition from one patient to another takes longer. And so, therefore, when you analyze, you have to look at different factors. It cannot be just simply, well, let me look at Marie as how much I pay her. Well, because I'm paying her less. Yes, in that sense, the labor ratio is going to look good. But when you analyze Marie as a number of patients that she's
Right.
observing, and then you look at Carlos, maybe Carlos better to keep because Carlos, even though I pay him a little higher rate,
Right.
but he's turning this so fast,
Exactly.
I'm generating more revenue with him.
Right. Right.
So
This is great. This is a very good example too, Pedro. I like that.
yeah, so there's different analysis that has to be done, and this is why again that the analysis, why financial analysis is so important, especially in moments of uncertainty. The thing is, when the economy is good, money is flowing, people do not get concerned, and is
True.
unfortunate because it should not be that way. It should always be
Exactly.
done. But I know that in the last 3 years since the COVID,
Yes.
2021, and I'm looking now 2022, starting the same pattern of concern, inflation, the tax rates, and all of that is incentivizing people to dig in. But it should be done at all times. But in any case, you have to be looking at these numbers and dig in. You cannot be just so superficial. Yes, the gross profit ratio should be one to be done. Your labor ratio should be done, but you can see you should be able to dive in a little more because if you have to make some decisions, or for example, you're analyzing a potential purchase of another business, you have to be able to analyze those numbers because yes, I can look at the revenue. Wow, great business as far as revenues, but it might be that there's some information there that you may have to make some adjustments, and the only way to do that is through financial analysis.
Yes. Yes. Definitely. It will affect valuation as well, like you said, when purchasing a business, because imagine one of the things that people may not look at is in case of, let's say, having contractors doing the work, is that are contractors getting changed constantly? And so if someone is wanting to buy the business
Yeah.
and you don't have any contractor or anyone around long enough and there's no process there, they're going to have a little bit of a hard time because they're like, well, if as soon as I purchase this business, some of these will just disappear on me. I'm just going to lose money until I replace them. So those are the type of decisions that they would make too when purchasing a business.
Yeah, that's a good point. Yes, that's a very good point.
Yeah. So, these are different types of analytics. This is just, we went off of just one or two ratios here. And then we can go into more expansion. For example, if you want to create a trend analysis for your business, you can pull out, let's say, 2 years or 3 years of monthly data and then see how revenue is going upwards, see if there's a growth pattern. If not, if there's an up and down, then you would wonder and see if it's seasonality happening. These are the different types of ways that you can run reports.
Mhm.
Granted that the reports have accurate data, right?
Exactly. And I have said this many times. Yes, if you have that why the accounting in here now you see that why the accounting is so important,
Yeah,
because if the numbers are not accurate, then you can see the danger, because you're gonna do all this analysis and arrive to the wrong conclusion.
exactly.
So why the core of all of this is solid, very solid bookkeeping, and why you need to invest in a good accountant, because that's going to be the key to do financial analysis, tax planning. You're going to, from there, if all of this different analysis will be done, and if you don't have reliable numbers, you can see the danger.
Yeah, exactly. For example, taking from the example we worked on earlier, say we're looking at 2 years of data, and
Hmm.
say you had different people working on your books, and then the last 2 years your contractors were sitting in the operating, and now your new accountant put this year where it should be, which should be cost of revenue, and then now we're looking at gross profit, and it's just way off, way off.
Yeah,
So
yeah,
now you
yeah,
have to
yeah.
make some corrections. Now your
Mhm.
gross profit is not making sense.
Correct.
And imagine an investor is looking at it and they're like,
What
your
just
gross
happened?
profit,
What just happened here?
something's
Yes,
wrong here.
yes.
And your investor, and if they're very like, I've worked with an investor that's super knowledgeable, and she looks at the financial numbers and the gross, and the percentages,
Yeah,
and she'll be like, something is off here. There's just, they're not making sense.
yeah.
So they may not be the accountants going into the details, but they know something is off. They're going to have to rely on a good accountant to explain, or at least go in and dig in and clean up. And that's kind of what I was hired to do back when I first started as a consultant. And it was truly a lot of digging to fix a lot of issues like that, because they
Yeah.
were miscoded in different areas. And then sometimes, the gross profit margin is just not it, because pricing is not right.
Mhm.
But yeah, that's the type of trends that we can kind of expand year over year, and then take a look at what is happening. And it could be super exciting. I get super excited when I'm doing financial analysis.
Yeah, yeah. It's just that there's a lot of good information there. It's unfortunate that people take the monthly, quarterly financial statements, the annual, and they put them on a shelf, and they
Yeah,
do nothing with that. That to me is a crime, because it's a crime, Marie, because there is the key to your success. I mean,
yes,
that is historical data, but you can extract information from that can help you now today. Okay, how do we move forward? Here we are, March 10th,
yeah,
and how are we gonna close this quarter? You know what I mean? How
exactly.
can we close? Well, let's look at the prior quarters of 2020, 21, and 2019. Let's see how we have performed.
Right.
But to expand in something that you mentioned, trend analysis is another one that I agree with you. The trend analysis is one of those basic ones that has to be done,
Yes.
irrespective of the business. Trend analysis. Now, depending on the industry, I will go a little deeper, and that is analyzing, like you said, the year to year, month to month,
Sure.
analyzing, periods that can help you. For example, first quarter of the last, let's say, 5 years. So you're going to be closing 2020, 22. Let's look at 21, 2020, 2019, 2018. Let's see how we have performed first quarter of all those years. But then in addition to that, depending on you can go to services or products. You know what I mean? That you have trend
Right.
analysis, but now even deeper, and that is,
Digging
instead
in.
of just revenues, I'm going to look at the different line items of my revenues. If in the case of
Absolutely.
let's say a medical office, you have maybe certain lines of services that you provide. If you are, in the case of accountants, CPAs, we might have taxes, accounting, consulting, and you can even go more deeper than that. But at least as a basic, you can get an
Right.
idea. Then I can look at, most of my revenue come from taxes. So if I have to make a decision about either do I, and this will be an analysis for all business, and maybe
Of
you're
course.
dedicating resources to a side of your business that is not generating the revenues. When you analyze, and you should have P&Ls by at least services.
Yes.
You know what I
Yes.
mean? And I
Yes.
know that most businesses don't do it, but for example, if you're in construction and you have, let's say, a residential, let's say you do residential and commercial. Well, you should have
Right.
a P&L of residential and one of commercial, because
Yes.
then
Yes.
it may be that you're investing too much resources into the residential construction, but you're losing money there.
Right.
Is really
Right.
where you're losing money. So if I divert my resource into commercial, where I do make, let's say 80% of my revenues come from commercial, is my profitable side of my business. All of that analysis is going to help you make decisions. I'm not saying that you need to now discard the residential, but at
Right.
least you are aware. Listen, where you really, what it is sustaining this company is your commercial division.
Right, exactly. Yeah, this is excellent. These are really great examples of how business owners can create profit and loss statements by their revenues,
Yeah,
and then analyze how they're performing and make a decision. And same like when you said other services or products, you might want to dig in and see which products are actually performing better. And then you might even take a look at, for example, if you're looking year over year or multiple years and comparing this year based on your numbers, you might say, well, 2 years ago the first quarter was great. What made it great? Let's see which products we sold, and maybe
yeah,
there was a product you didn't carry anymore, and that was a very profitable product, so you might want to bring it back, or maybe there's a similarity that you want to introduce again. So these are types of decisions you can make, but unless you are looking at the financials and the data that's behind it, you are losing opportunity to
mhm,
really grow your business. And
correct.
this is where success mindset comes in, which most business owners feel like, okay, I got to put money in advertising, marketing, and okay, that's all well and good. But your financial data are the only things that are going to tell you what your next step should be. You can
Yeah,
try to sell all day long, but if you don't know what your numbers, what your costs are, and what are the profit drivers, you're not going to be able to set a successful
correct,
road.
correct.
Yeah.
Yeah, otherwise you're just guessing. Yeah, you're
Yeah.
going out there shooting, like we say, shooting in the dark. Let's see what happens. And that's the reality. You're going blind. You're going shooting in the dark, whatever you want to call it. But basically, that's what's happening. You're guessing. Yeah,
Yeah.
you're going out there, and all of a sudden, you say, Marie, I decided to get rid of Division A. Why?
Why?
Yeah, how? How is it possible? Based on what? And what data gave you that? No, well, I felt. No, then it's all about feelings. In business, it's not
Yes.
the feeling,
It's not.
it's facts. And then so that's how the successful businesses are happen. That's how you run a successful business, not on feelings, is on facts. And then that
Absolutely.
based on that, you make decisions. And yes, sometimes you're gonna make tough decisions, letting go of clients, letting go of divisions,
Right.
merging, all of the acquisitions. It's based on facts and numbers.
Yeah, absolutely. And here we are, and that's why we do a lot of these sessions. And I know we have already gone through the 30-minute mark, which we do want to be very cognizant of our audience's time. Business owners are very busy,
Yeah.
and we hope that this little segment really helped you out understand why financial analysis is so important. And I know we didn't even touch on some of other areas that we
Yeah.
could talk
Yeah.
about.
Next
Financial
time.
analysis is really huge, by the way.
Yeah.
We can go into probably five, six segment series, episodes of it. But I do want to leave you with what I always leave you with is that Jim Rohn says You are the sum of the five people you surround yourself with. And we hope that we are the two of the five that you are surrounding yourself with as a business owner to grow your business. So, with that, I want to say thank you so much for your time and thank you for joining us this morning. And we hope to see you next Thursday, 10 a.m. Eastern Time. Until then, be successful, be great, and we'll see you next week.
Okay, take care.